Good afternoon, everyone. Today is Friday, April the 8th, 2016. My name is Christian. Today we're looking at the U.S. markets here, starting off with the S&P 500 Large Cap Index. And this is a 6-month chart. Each one of these candles represents 1 day of trading activity, okay? Main thing here, if you follow us on Facebook, you already saw this alert. Basically, it came out earlier this week. I shared the chart, but I didn't show it to you on the S&P 500. I showed it to you on the Wilshire. It's basically the same situation here. We've been bullish the markets, the U.S. markets, for a while since we've had this cross here of these short-term moving averages, and we expected this to be a nice size bounce to the upside to test this previous high. So we've got that. It's actually been fulfilled now. And we've been telling you the whole time that as long as price stays above this short-term moving average right here, you have nothing to worry about. Just continue to stay long. That was the idea, right? And we've maintained that for a while. Come and tested it a few times, but never getting a close below that point. And so we just continue to press higher and higher and higher until this week. All right, so now we've got a couple of closes below that short-term moving average right here. Now that is the first sign of weakness. You're starting to see a decrease of the momentum to the upside. Okay, the last line that you wouldn't want to see broken is this red dotted line right here, a 20-period EMA. You can see right here. All right, that you wouldn't want to see that close. A close below that would be the end of that upward movement trade. There, you'd be exited that position. However, on this situation, there's a couple other things to point out. Obviously, I'm no longer really bullish on this trade. The trade has been made from this point here all the way up, and I'm done with it. And the other thing I want to point out here is that you have a bearish divergence. So let me clean that up. That bearish divergence is also warning of the same thing, that you're overextending to the upside and is not sustainable. So what we have here, let's go ahead and draw it out. We've got price activity, it does this, right? And pulls back, bounces again, pulls back to right small low point right there. Now, at the same time period, look at the slow stocks. You got the high point up here and here, right? It's trending down. And the low point here and here is also trending down. Now, let's look at the corresponding time period. High point here, higher high here, is trending up, while the slow stock is trending down. And the low point here, remember to use the closest point here, is trending up as well, right? Basically, this is not sustainable, so you look for this to break down. So this is an important element here. You also notice the same thing is confirmed by the MACD. So you cross back to the negative side here, right? This, okay? And you'll notice that this high point has not been beat out by anything else that's happened. So just continue to trend lower and lower and lower while price was continuing pressing higher and higher. That's a bearish divergence. We look for this to break down. Okay, now some people are going to ask, hey Christian, do you go out there and you short this guy right now? A lot of people would, and I'll show you how they'll do that. They'll look at this like that, or this little guy here, we'll say this, they'll call those shooting stars with a divergence, and we'll short that. The problem is that this bearish divergence could continue to form further on. So what the best trade opportunity that I find is to wait for your cross in the bearish way, just like you waited for the bullish cross here of this short-term moving averages. Wait for the bearish cross when they come back over here. Okay, so you got this guy's cross over here. When that happens, you have price activity to come around, different setups. You may have another shooting star formation, something like that. You could take that on the sell side and look for a pullback kind of thing. That's what I would do with it. So I'm just letting you see how I would wait for it, basically saying that this could continue to press one way or the other. So before I got short, I would wait for it to actually show a complete turnaround. Here's another way to look at that. Let's look at an inverse ETF of the S&P 500, okay? Okay, here we are looking at the SH. You can see this is an inverse ETF, right, where you're being bearish or have a bearish perspective on the S&P 500. You might look at an inverse ETF. And the reason why I would do that is not necessarily that you would trade this, but that you would actually be looking at it from a perspective so you could see it from a bullish perspective on a negative twist. So that a lot of times people look from a bearish perspective and they really can't read the chart very well. So you can just flip it upside down and get a very bullish perspective on a bearish trade. So in this particular situation here, you can see you've got support at this area here, the 20 level here, okay, here, and then you come back down, you hit it again. And the main thing I want to look at here is look at the MACD here. You got the bullish cross here, okay, and then we came back down and we did it again right here. It's starting to turn, right, in a bullish way. It would be about timing with the bearish move that we're looking at. I'm starting to set up on the S&P 500. So what I would do here is look at this blue dotted line right here, your EMA at 10 period right here. Okay, when that guy moves up here and crosses back above this 20 period moving average, then I would be looking at that as my entry signal. Okay, like you head back here with this little dotted line right like this, kind of draw it out, minding our business, and at that point in time, I'd go looking for entry opportunity here, here, that kind of thing. Looking for a test previous high, which you got here. So in this particular case, the same overall story. So that's kind of how I would want to time my entry on that sell side, was wait for those cross of the moving averages before I got involved. Okay, one quick look here at GLD. Basically, somebody asked me what my thoughts were on gold. Basically, I have a bullish perspective on that. I think it was, I don't know exactly how long ago, but we posted on the Facebook page a chart looking at gold, and you had a cup and handle formation here. You've got kind of a saucer formation, very bullish chart formation, and then you can see we just kind of moved sideways, kind of got choppy, didn't have any direction. What we were doing here was the opportunity was pulling up to this 50-period moving average. As you come up to that, you find support, 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 support. That's right there where a bull's on a bullish condition like this, you'd look for that great entry opportunity at that 50-period moving average. So that makes sense to me. Yes, I'm bullish on gold. One more detail to point out here, looking at the MACD here, whenever you move above the zero line right here, okay, as the MACD moves above the zero line, it becomes a bull market. That's where you typically find that. So we come back at this point here, and we made a nice move, and then we had some consolidation. We pulled back down to that level, and you'll notice now, I'm cleaning that up right quick, you can see that you're fixing to make that bullish cross again of the EMA right there. Okay, so you're going to have that nice little bullish move here, and at the same time you're staying above that zero line, still in the bull market in gold. Okay, enjoy your weekend, be safe, and I will see you again in the next one. God bless.